Hello everyone, welcome to today's session. So today we are going to continue chapter number 11. Okay, till last session we continued or we discussed chapter number 10. So any doubts till chapter number 10 or any doubt with respect to any of the topics that have been discussed till now, I would request everyone to please ask your doubts. That is necessary because it will enhance your understanding about the topic. So don't hold your doubts. You can ask freely whatever doubts you have, whatever. Okay. So you can ask during the sessions, no issue also. So let's continue with the chapter number 11. Now, what is chapter number 11 and what it covers and how it is, different from whatever we have seen till now. So we have seen, if you see till now, is we have seen limited assurance engagements. We have seen no assurance. We have seen no assurance engagements. We have seen audit with an reasonable assurance engagements. But now we are again going back in the domain of reasonable assurance or assurance engagements.
Excuse me, sir.
Yes.
Sir, in chapter number 10, on page number 10.7, there
Mhm.
is one line, 1 minute. Accordingly, the practitioner shall not include any reference within the practitioner's report to the review having been conducted in accordance with this SRE. इसका आप एक बार यानी थोड़ा मीनिंग आप मुझे एक बार वापस बता देंगे?
Definitely, yes. Let me open at my end also. Just give me a minute. Can you just tell me the page number once again? Sorry.
10.7.
10.7. Okay, so you might be saying this particular paragraph over here.
Yes, sir, you have written the important
Also, yeah.
word.
Okay. Now, see what happens here is, okay, when your engagement, SRE engagement is there, and it is not, in compliance with your SRE standard.
Mm.
So your engagement, you cannot comply with this particular standard when there is an engagement. At that point in time, you have to basically, you are not required to mention any reference to SRE 2400. Now, the question is there a chance that, engagement can be without compliance of SRE? Yes, there is a chance. Now, what is the SRE 2400 engagement? That is an engagement to review historical financial statements.
Yes, sir.
Now, there could be certain scenarios where, it is required by law, and the law's requirement is in such a way that, some portion of this SRE might not get complied to. At that circumstance or in that point, you have to make sure that you are not providing any reference to the SRE. Remember, we saw one audit report where we have written that, okay, this engagement or this report is issued in accordance with SRE 2410 for the
Yes,
interim.
sir. Yes, sir.
Any such line you are not required to mention, or you should not mention when it is when you are not complying with the SRE.
Yes, sir. Yes, sir.
So that is the meaning of this particular line.
Yes, sir. Clear, sir. Thank you, sir.
Any other doubts? Any further doubts, guys? No? Okay. So we have seen three different, like we have seen essay, like whatever we have discussed till now in audit, we have seen standards on auditing. We have seen standards on related services. We have seen standards on review engagements. Now we will be seeing standards on assurance engagement. Can anyone tell me what is the difference between SA and SAE? If you have read the chapter, you might be aware. What is the difference between SA and SAE? Anyone? No? The difference between SA and SAE. Now, what is the SAE basically? The thing we are going to discuss, that is the standards on assurance engagement. So if there are assurance services, assurance engagements are there. So when you have a, for assurance engagement or assurance services, we have a standards that are known as standards on assurance engagement. There are three standards: 3400, 3402, 3420. Now, why we have a different standards for SAE compared to SA? No? Okay, I'll tell you. SA basically deals with your audit that you are aware now. Okay, standards on auditing deal with audit. But when I talk about standards on assurance engagement, it is assurance engagement other than audit. So assurance engagement which are not audit are covered by SAE. Now the question will be: are there any assurance engagement where where we are not doing an audit? Yes, there are assurance engagement where you will not be doing an audit. For example, examination of prospective financial information, that is SE 3400. Again, type 1, type 2 report. Remember, we have discussed in SA 402. Now, think that you are a service auditor. You are issuing the type 1 and type 2 report. So, SAE 3402 will be applicable. Assurance engagement on compilation of pro forma financial information for prospectus, 3420. So there are assurance engagements where it's not an audit, but still you are issuing an opinion, you are issuing some kind of assurance, reasonable assurance, or maybe more than that or maybe less than that, but yes, there is an assurance involved. Basically, this is assurance engagement other than audits or review that we have already discussed. Okay, so 3400, 3402 and 3420, there are three standards basically that we will be discussing in this particular chapter. The first one, 3400, talks about examination of prospective financial information. Second one talks about assurance reports on the controls of service organization. That is nothing but type 1 and type 2 report of SA 402. And the third one is your assurance engagement to report on compilation of pro forma financial information included in prospectus. We will see examples of this also with respect to the prospectus and everything. So that is the major difference between SA and SAE. Any doubt till now? Any doubt, guys? Okay. If no doubts, now let's proceed. See, when we were discussing SRS, I told you there is no assurance involved. When we were discussing SRE, I told you there is a limited assurance involved. When we were discussing SA, our focus was on the reasonable assurance. Okay. Typically, SA talks about reasonable assurance. Now, when we will talk about this particular SAE engagements, at that point in time, again, our assurance will be more than review, because these are assurance engagement, but can be, cannot be, or may not be reasonable assurance. So that depends upon the type of opinion that you are issuing. Okay, so basically, again, the type of engagement and the type of opinion that you are issuing, that will decide the level of assurance. And we will see when we'll go through 3400, we will see in detail that how assurance is there or assurance is involved when you issue a report under 3400. Okay, now let's go through each and every scenario, that is 3400, 3402 and 3420, to understand what these standards are applicable in which particular scenario. Okay. So first one is your 3400, that is examination of the prospective financial information. As the name suggests, again, first of all, you are doing some kind of examination, number one. Number two, the examination involves prospective financial information. Okay. The examination involves prospective financial information. Can anyone tell me what is prospective financial information if you have read the chapter? Can anyone tell me what is prospective financial information? No? Okay, expected cash flow statement. Yes. What else? Anything else? What could be a prospective financial information? No? Okay. Prospective financial information is not only restricted to your, I would say, cash flow statements or budgets, but I'm talking about any financial information. Okay. Any financial information which is based on the assumptions about the events that are going to happen in future. Okay. These are just highly subjective in nature, whatever assumptions we take. Okay. Now, prospective financial information can be a forecast, can be a projection, can be combination of both. Plus, it can be 1 year forecast, it can be 5 year forecast, it can be, so you don't have any specific criteria. Okay, if this is a 1 year, then only it's a forecast. No. So prospective financial information has a wide definition. That means that it will cover each and every financial information which is based on the assumptions or which is based for the future. Okay, so it contains basically two categories. One is a forecast, one is a projection. Quick question, what is the difference between forecast and projection? Come on, guys. Difference between forecast and projection. Come on, quickly. Difference between forecast and projection with respect to your prospective financial information. No? Okay. When I talk about forecast or projection, okay, I'll explain you with an example so you can better understand. See, first is my prospective financial information. Now, this prospective financial information, as the name suggests, first of all, it is a prospective. That means it is based on assumptions. Second, it's a financial information. So I'm not going to discuss about the part financial, what is financial information. Now, when I talk about it is based on assumptions, okay. Now, these assumptions can be categorized as a forecast or projection. So basically, I will make it two heads over here. One is your forecast. Second is a projection. Now, when I talk about the forecast, that means that the financial information, again, it is in relation to the financial information. So whatever I will discuss in relation to the financial information only. Okay. So when I talk about forecast means the financial information that is again based on the assumptions to the future events, but they are kind of a best estimate assumptions, means they are more near to the actual scenario. Okay. If I talk about, okay, let's say I have a detailed data available based on which I calculated some amounts that there is a high probability that 90% it will be similar, 90% it will be near to this particular amount only. That is a forecast, because that's the best estimate assumption that I'm taking as of today. When I talk about projections, again, projections involve hypothetical assumptions, not necessarily that may take place in the future. So that's the difference between forecast and projection. Are you getting the point? The difference between forecast and the projection. Basically, here the management, like decides what is the best estimate in this particular scenario based on the given information, based on the given data, based on the actions they are going to take. Clear? Any doubt with respect to the difference of between both? Any doubt? Okay. No. If no doubt, then let's quickly also we will see the definition for the both. Okay. So that we can understand what is the actual definition for both of the scenarios. So your forecast, when I define a forecast, means again it's a prospective financial information. As we are discussing, it's a prospective financial information that is based on assumptions. Again, assumptions are into the picture, because again I told you that prospective financial information is in itself is based on the assumptions, and forecast is a prospective financial information, so it is also based on the assumptions. Now the only difference here is these assumptions with respect to the future events. Okay, here assumptions with respect to the future events that are going to happen. Okay, and management expects to take place. These future events management expects to take place, and the actions with respect to these events expects to take as a date of the information that is prepared. Basically means that management, whatever management will do with respect to these events, based on that they will prepare the information. Okay, so that's a forecast. Now when I talk about projection, projection basically involves hypothetical assumption. Now when I say hypothetical assumption, that involves some kind of probability that it may not happen, or which may not necessarily expected to take place. Okay, it can be mixture of a forecast and hypothetical assumption. Means here I can do a mixture of this particular best estimate assumption and hypothetical assumptions. But whenever I involve any kind of hypothetical assumptions, it is a projection. Okay, so hypothetical assumptions or combination of hypothetical assumptions plus your best estimate assumptions. Okay, for example, if I give you an example, let's say a company might prepare a projection of its sales revenue. Okay, assuming that it will launch a new product line. Okay, they are launching something new in the future, and the projection would explore, okay, if we launch this product, how it will go, what will be the outcome. That is the projection. So if I talk about example of both of the scenarios, a company might prepare let's say a projection of its sales revenue okay, assuming if it is launching new product. See here, the thing that I'm assuming is that I will launch a new project. I'm doing a hypothetical assumptions. But if I talk about example for this particular scenario, that's the best estimate assumption or forecast. It is kind of, let's say, company might prepare a company might prepare forecast of its sales revenue for the next year. See the difference between both. Here, my key point was the sales revenue. I'm assuming the sales revenue, but based on an event that is launching the new product. That is hypothetical assumption. But here there is nothing hypothetical, like I will launch, I might not launch. Here everything is same, like I will do assumptions, I will do prepare, I will make an estimate of the sales for the next year, okay, based on the information that I have today, based on the market data, trends, historical data, everything. So that is your forecast. Okay, now these both are part of prospective financial information. Now, when you have to do an examination of prospective financial information, and after examination, when you have to issue a report, at that point in time, your SAE 3400 will come into picture. Okay, so we when we are required to do an examination of prospective financial information, at that point in time, SAE 3400 will come into picture. Now, I have a question to everyone. If it's kind of a bonus question you can consider. There was one particular provision in professional ethics chapter that we studied about issuing an opinion on the future related data, something similar. Can anyone tell me what that was?
Vouching for accuracy.
Yes.
I think it's a opinion or any kind of gesture does not indicate that whatever projections are made, they are going to for sure to be achieved by the company. It should not be such.
And what was the clause and what was the schedule?
I don't remember it, sir.
Okay. Anyone, if they remember any clause or schedule? Your answer is right. I'm not saying it's wrong. It is right. But the clause or schedule, if anyone can tell me. Bonus question. Come on, quickly. No? Okay, it is in schedule 2. So second schedule, it is schedule 2nd. Okay. Basically, it was part 1 of second schedule, clause 3. Where we discussed about that in case of a chartered accountant in practice, if he permits his name or the firm's name to be used with, or an estimate of earning that they are contingent upon future transactions, okay, like it is appearing that he is or he or his firm or his partner is vouching the accuracy of the forecast, in that case, he will be held guilty of professional misconduct. At that time also, I specifically asked you to provide a reference of SAE 3400. I'll just show you the notes that we discussed at that point in time also. It is remember something like that we discussed in during the professional ethics, and I specifically asked you to provide this reference over here of SAE 3400. That is, we are going to discuss in future that why SAE 3400 will not fall part of clause 3. Because here, what I'm discussing that you are going to issue opinion on a prospective financial information, and at the same time, I'm saying clause 3, which is something when you issue or when you permit your name to be used with the vouching of accuracy of forecast, then you will be held guilty of professional misconduct. So both are somewhere linked. You may ask why then we are having an engagement on this particular part. The reason here is that here we are not vouching the accuracy of the forecast. Understand first thing. Here the examination is being happening, no doubt. I'm not saying we are not going to examine the prospective financial information, but we are not vouching the accuracy. We will be looking for the way the forecast or projection is prepared. That is the difference. Here we are going to discuss about the best estimate and hypothetical assumptions, how they are prepared, the methodology, the data, the information that is used. And we will see when we will talk about the reports that are issued, that okay, how we specify that this is not about the vouching for the accuracy. So we will discuss this in a while when we'll discuss the audit report, or the not the audit report but the report under this particular standard. But as of now, remember that this is not going to fall under clause 3 part 1 second schedule. So over here also, if you want, you can give a reference again. Clause 3 part 1 second schedule. And here not applicable. Okay, clear with this?
सर आपने अभी जो पीडीएफ पर लिखा वो दिखाई नहीं दिया.
ये है ना रेफरेंस.
Okay, now yes sir.
Actually it is on top, like my let me zoom.
No sir, actually वो मॉड्यूल शो कर रहा था ना, इसीलिए.
Okay, yeah. So any doubt till now with respect to this one? Any doubt? No? Okay. So that was also a reference we made during our professional ethics. You can also mention over here and the same reference over here. Okay. Now, what we are going to discuss first of all is that what we do, what kind of examination we do when it comes to the examination of a prospective financial information, and what are the objectives of the auditor over here. Okay, so we are going to understand what are the objectives of the auditor over here, and how and what type of examination auditor will perform. Okay, so when it comes to the SAE 3400, the objective of the auditor basically is to assess the reasonableness of the management's assumption. So whatever assumptions management has taken, we are going to look into that assumption. auditor has to obtain sufficient and appropriate audit evidence. Okay, sufficient and appropriate audit evidence. Now again, we will shift to the term sufficient and appropriate audit evidence, or appropriate and audit, sorry, not audit evidence, but sufficient and appropriate evidence with respect to management's estimate. So objective here is, first, to obtain sufficient and appropriate evidence regarding, very important now, number one, management's best estimate assumptions. Management's best estimate assumptions on the prospective financial information that is there. And we need to examine that this is not based on unreasonable. This is not based on unreasonable data, unreasonable financial information. Okay. And in case of hypothetical assumptions, so here best estimate assumptions are not unreasonable. And in case of hypothetical assumptions, we need to check that these assumptions that the management is making are consistent with the purpose of information. Means here in hypothetical assumption, what happens is I can assume like, okay, this, I'm going to do this in future. I'm going to do this in future. And then what will happen? So there are lot of ifs and buts, involved in this particular scenario. Now here I cannot go behind the reasonableness of the hypothetical assumptions, because there are a lot of ifs and buts. But what I need to do is, I need to first check what is the purpose of building these assumptions, of building this information. Why I'm doing this ifs and buts and preparing this whole information. What is the reason behind it? Tomorrow I cannot, just wake up in the morning. No, I need to prepare a forecast that, okay, I'm going to launch 2 new products, and then what will be the sales? No. So there should be some logic behind, or assumptions behind, like why I'm preparing this particular information. So here, with respect to this hypothetical assumptions, I need to see whether they are consistent with the purpose. Let's say, for example, let's say, I prepared a particular, projection. Okay, if I issue this particular new product in the market, this is going to be the cash flow statement. And based on that projection, I just, went to the bank. This is a projection that I prepared, that if I issue new product in the market, this is going to be the sales and forecast and, sales, cash flow and everything. Now, there is a purpose that I'm preparing this projection for the bank, so that they can fund my expansion to manufacture new product. So there's a purpose behind it. I need to check whether the information or hypothetical assumptions that has been prepared are consistent with that purpose. Okay. For example, bank requires you to prepare 5 years projection when you issue a new product. But let's say, for example, management prepares, these kind of projections, but where management not only consider issuance of a new product, they are considering, okay, no, we will issue 3 new products. Irrelevant. Bank is asking you only to talk about 1 product, not the 3 products. So accordingly, you need to see the purpose of the information. Second, you need to think about, or when you are doing an examination of the prospective financial information, you need to see they are appropriately prepared basis on the assumptions. So again, both are assumptions. One is a best estimate, one is a hypothetical. Both are assumptions, and these both should be used to prepare the prospective financial information. So your prospective financial information should be based on assumptions. And the third point that we need to take care is that your prospective financial information is properly presented, including your material assumptions. Okay, presented, disclosed, everything should be appropriate the way it is required. So prospective financial information should be appropriately presented or properly presented along with all material assumptions. Okay, classifying whether they are the best estimate assumptions, whether they are the hypothetical assumptions. Okay, and there could be a prospective financial information which is prepared based on the combination of best estimate and hypothetical both. So you need to again look into that. Any doubt till now? Any doubt? Okay. Now, if no doubts, then during this particular discussion, we will be using the term auditor. Okay. Again, that doesn't mean that the auditor is the person who should be, statutory auditor of the company. No. The term auditor here reflects the person who will perform this kind of examination. So we will refer the person as an auditor in this particular scenario. He may not be the statutory auditor of the company or of that particular entity. Okay. Now, when we are preparing this when the management is preparing prospective financial information, that at that point in time, it is something similar to what we have seen now in the review of interim financial information or historical financial information. Here, management will be responsible for the preparation. Again, whatever we have seen till now in audit will remain same. That the prime responsibility will lie with the management, not with us. We are not here to prepare the information. We are here to examine the prospective financial information. Preparation, identification, disclosure, assumptions, everything is management's responsibility. We are not going to perform any of such procedures or any of such activity like preparing the prospective financial information. Okay, so that is one thing. Another thing is that once you understand what is the objective of the auditor, we understand what is the prospective financial information, we need to understand that okay, how and when we need to accept these kind of engagements. Okay, I know what is prospective financial information. I know what I need to do in prospective financial information. But what things are required to accept the engagement? What should I check when I'm going to accept the engagement? Or is there any requirement like, okay, I can accept any engagement of prospective financial information? Or there are certain things that I need to first comply with before I can, accept the engagement? So what is required? Can anyone tell me what are the things usually you check before accepting an engagement that we have seen till now? Anyone?
Terms of engagement that are stated in the engagement letter, that means conditions, whether it poses sufficient limitation on our scope of accepting this projection or not. And secondly, we also check for the time availability of resources or human powers to accept or not. Again, integrity, objectivity of the management, and also we check whether there is any independence threats, and can there be any misconduct on our part if we accept this engagement. We also have to look into all the details.
Correct. Yes. Very good. And any specific essay which is there on the engagement, audit engagement?
Agreeing the terms of engagement. SA 210.
Absolutely correct. Yes. So, as you say, these are the basic things that we need to look into when we are accepting the engagement. Okay. So, in accordance with SA 210, whatever we have seen with respect to terms of audit engagement, when it comes to the audit, similar concept is applicable over here. That we as an auditor need to agree the terms of the engagement with the client. Okay, like sending the engagement letter, everything, discussing. So you can say kind of, complying with the SA 210. Now, apart from that, there are something additional that we need to think when it comes to the engagement of prospective financial information. Now, the reason why is because this particular engagement is something on the prospective financial information can be misunderstood. Let's say, for example, if a report on a prospective financial information, if circulated in such a way that it appears that someone is guaranteeing the future going concern of the entity, then it is incorrect. Are you understanding the particular kind of involvement here? Like if today some company misuses the report or examination report issued under this particular essay to demonstrate that okay, someone is guaranteeing for my future, then it is not appropriate. That's why before accepting, we need to make sure, we need to understand something critical with that point in view. Those are, apart from SA 210, I will check number one, the intended use of the information. Where, like, why do you need such kind of information? Or why, first of all, I will ask a question to the company, why do you need examination of prospective financial information? Why do you need a report on this? What is the purpose of having report? Who is asking you to have a report on prospective financial information? Number two, distribution. To whom you will distribute this particular report? It's for the general public, or it's specific to some people? Number three, the nature of assumptions, or you can say category, basically nature slash category of assumptions. Which are those categories of assumptions? Quickly. Category of assumptions.
Best estimate and hypothetical.
Yes, best estimate and hypothetical. So what kind of assumptions you are going to make in this particular prospective financial information? Then elements of the information that are going to be included means, are you going to prepare balance sheet for the 5 years? Are you going to prepare P&L for the 5 years? Are you going to prepare whole financial statement for the 5 years? Cash flow statement for the 5 years? What kind of financial information you are going to, going to prepare over here? So the elements of information. And then very important part, period. Covered. See, it is said that the longer the period, it is difficult to estimate. The longer the period is, the difficulty increases to estimate that particular period. If you ask me today, can you predict the sales for the next year? Yes, it can be predicted. Okay, with respect to some uncertainty will be there. Okay, but still not a 50-40% uncertainty. It could be I can predict at a 80-90% accuracy. Okay, best estimate can be there. If you ask me, can you predict sales after 15 years? What will be your sales? Answer is no. Sorry. 15 years too long term. Lot of factors are involved. Market situations, economical, political, a lot of things will be involved. We don't know what will be after 15 years. You even don't know what will be after 15 years based on the growing technology. So the longer the period is, the longer, the higher the difficulty, the higher the uncertainty will be there in the estimation. So that's why it's very important to understand what is the period that is covered over here. Now here, if any of the thing is not appropriate, for example, intended use. If I think, oh, no, it appears that management is going to use in not an appropriate way. At that point in time, I will just say, okay, I will not accept the engagement. Distribution for the general public without any disclaimers or anything, I'm not going to accept the engagement. Nature category, let's say for example, all the assumptions are hypothetical assumptions and very much hypothetical. Like a lot of ifs and buts are there. Again, I should not accept because it's a lot of hypothetical assumptions, unrealistic, which makes them unrealistic, unclear, vague. Okay. Then elements of information. If I feel the elements of information are inappropriate, misleading, I will not accept it. Period covered, too long to estimate, I will not accept the engagement. So based on these things, I need to decide, should I accept the engagement or should I not? Are you getting the point? Apart from that, whatever we do in 210, similar things are required to be done over here also. The last of the things will be similar. Like, okay, I need to estimate what is the time, nature, time, and extent involved, resources, planning, information, terms and conditions, writing, code of ethics, everything same. That is not an issue. But apart from that, these are the very important things that I need to talk or I need to check before I accept an engagement. Clear with this? Yes, no?
Yes, sir.
Okay. So this was the accepting the engagement basically. You can also refer essay 210 with when it it is, other things are similar, only these are the points, these are the special points you can say. So you can highlight these as a special points, special consideration kind of. Okay, so your intended use, general or limited distribution, nature of assumptions, elements of information, and your period. Okay, now once you have decided, okay, there is nothing stopping me, everything is fine, I'm going to accept this engagement, then I would say it is 50% work is done, because rest of the 50% is whatever you have seen till now will be applied but in a modified way. This was something that you need to understand in detail. First, the type, what is the prospective financial information. Number two, what are the categories of assumptions. Number three, what is the objective of auditor and how it is different from whatever we have discussed in professional ethics. Number four, before accepting the engagement. Now whatever we will discuss, little or more, you will see like, okay, this is nothing but the modified version of whatever we have learned till now. Okay, so let's proceed. The second part is, once you accept the engagement, what you do? Once you accept any engagement, be it a audit engagement or any engagement, what you do? Come on, guys. What is the next step after accepting the engagement?
Communication with management and those charged with governance about the terms and their responsibilities.
Okay, yes. Let's say engagement letter, terms, responsibilities, everything signed. Now, what next you will do after that?
Planning and deciding how we would approach this engagement.
Yes. And what is the first step in the planning? Like, how do you start the planning? What you first do?
Understanding the entity and its environment.
Absolutely correct. Yes. The same thing we are required to do over here. When it comes to the examination procedures, like again, we are not going to term as an audit procedures, but the examination procedures. The term that will be used will be the examination procedures. Okay. So the first thing in the line or in the deciding what should be the examination procedures, understand the entity. Apply SA 315. Okay. Apply SA 315. That what is the entity, what entity does, because till the time you are not aware about the entity, how can you understand the assumptions that are made? Not possible. I don't know what entity does. How can I estimate what entity will be in next year? Simple. If entity, let's say for example, is manufacturing cars, I can see what is the car market, what is the car industry, where it is going. Let's say for example, industry or particular company is not into the car manufacturing. Let's say they are manufacturing typewriters. Till the time you don't know what kind of product they are into or what kind of business they are into, you cannot estimate. Okay. So first of all, understand the entity, determine what kind of nature, determine the NTE of the procedures that are going to be performed, nature, timing, and extent. How? Internal controls, documentations. You need to check for the likelihood of material misstatement. Okay. What is the, again, one more important area is, remember something we have discussed with respect to management estimation uncertainty. Estimation uncertainty, anything management estimation uncertainty? Yes, no?
In fraud risk factors, we assess their management can use estimates to make a fraud.
Okay. SA 240, yes.
ऐसे 540 में भी हमने देखा था.
Yes, very good. SA 540. Okay. SA 540 basically discussed about the estimation uncertainty. Like, what is the uncertainty involved in the management estimates? So there were certain procedures that we discussed at that point in time. We will develop our own point estimate or range estimates to check whether the management estimates are appropriate or not. So over here, first of all, you need to assess what is the uncertainty involved. What is the risk with the estimation uncertainty? Okay. Then remember something we discussed about how to verify an estimate. Like, what are the aspects that we need to check when it comes to the verification of estimates? Yes, no, something.
How management is making that estimates, what information or assumptions they are making, and the kind of source of data where they are based on the basis of which they are making their assumptions. They can be using service organizations also, or experts.
Yes, absolutely correct. So when we discussed about the management estimate, we discussed about two important things. That first, we need to check about the quantity of the account. When it comes to accounting estimate, we need to check about the quantity expect. That is the sufficient. We need to talk about sufficient audit evidence means with the quantity, and that is something I'll come to the point. Then there was another point was appropriateness of the audit evidence. That is whether the relevance and the reliability is there or not. Remember something, relevance, reliability, we talked about relevance of the data that is being used, reliability of the data that is being used. We talked about ITE, information produced by the entity, source data, report logic, report parameters, completeness, accuracy of the information. We discussed about CCO, capability, competency, and objectivity of the person who is preparing the estimate. Are you getting something? Remembering from that particular lecture?
Yes, sir.
Now, whatever we have discussed over there, like the same on the similar lines, it will be applicable over here. If you see, once we decide or once we do the risk assessment, like the likelihood of the material misstatement as per 315, okay, then we need to think about management judgment involved, kind of an estimation uncertainty. Then we need to talk about the source of the data. We need to ask management, what is the source of your data? Okay, their adequacy, reliability of that particular data. When I talk about adequacy, it is nothing but the kind of the relevance involved in it, whether your data is relevant, whether your data is adequate for the purpose of for which you want to use, whether your data is reliable, kind of your data is complete or not. Okay, what is the basis of your data, whether this is the information produced by the entity or something which is derived from the industry statistics to support the assumptions. Okay, so I need to ask management from where you have obtained this data, its relevance, reliability, something I need to check, completeness, accuracy. So I need to verify that so that I can say that, okay, appropriate data has been used for the assumptions. Then stability of the business, very important point that we need to understand. See, why stability of the business is one of the point that we need to understand, or we need to examine when it comes to the examination procedure. Reason, because if there is a lot of fluctuations, you cannot estimate. Okay, your estimation will not be appropriate. But when the stability is there in an entity or its business, estimations are still possible and with a lesser uncertainty. Yes or no?
Yes, sir.
So that's why it's very important to understand what is the basically stability of the business, so that you can do an estimates, or like management can do an estimates with more accuracy. Okay, less uncertainty. So that was your talking about stability of the business. Okay, then it comes to the next point is the engagement team's experience. Like again, whenever we do audit, we also consider our experience as part of SA 315. We understand what is the capability. Even SA 210, at the time of SA 210, we understand what is the capability of the team, whether do we need expert or everything. Similar over here also, nothing new. Okay, so this is what we are required to do when it comes to the examination procedure, basic things for the planning. Again, then what kind of information that is being prepared by the management, we are required to consider, then some procedures and everything that will be there. Any doubt till now?
No, sir.
Okay, then very important point I would say is, again, I will focus again, one important point is the period. Period is very important. The reason, because as I said, okay, the more the length of the period, the lesser will be the accuracy of the estimates. Okay, so you need to check what is the operating cycle, what is the period that is being covered, what is the scenarios and assumptions pertains to. Let's say, for example, I am using last 2 years data to estimate for next 5 years. not relevant. The period for the data and the period for the estimates do not match. So what periods are involved is very, very, very important every time. Like, think of a very critical scenario, like very critical parameter is a period. Now comes the last part, that is presentation and disclosure of the report. Okay. Now, whenever we are kind of issuing an opinion with respect to prospective financial information, we need to make sure there are certain things, first of all, that is being appropriately presented and disclosed. Okay. Very important points, I would say that these are like from the presentation and disclosure point of view. See, what happens is when a prospective financial information is being prepared, it is not something I have a applicable financial reporting framework involved into it. Okay, it may be, it may not be. Okay, plus it's a prospective financial information. There are high chances that if a statute, a regulation is not there, then management may disclose information in the way that it could be a misleading information. So I need to understand, first of all, is there any relevant statute, regulation, professional pronouncement involved with respect to the presentation and preparation of the this prospective financial information? If yes, well and good. I need to check for that. That will be my that will be the reporting framework over here. But if they are not, at minimum, I need to consider these information. At minimum, I would say. And which are these informations? These are these particular, you can say 6 points that I need to consider with respect to presentation disclosure. Important points with respect to presentation and disclosure. Okay. Now that is number one, that your prospective financial information should not be a misleading one. Very important. So when you don't have any pronouncement standard or anything which can govern your prospective financial information's reporting or presentation disclosure, at that point in time, you need to make sure that is not misleading. Number two, your accounting policies should be disclosed appropriately. Now, why? Because you're talking about future. You need to show that basis of which accounting policies your future data is prepared. Then comes the assumptions. You need to disclose your assumptions, or management needs to disclose their assumptions very clearly, whatever assumptions they are, with the classification. Okay, this is the best estimate, this is the hypothetical. Okay. Fourth, the date as of which the prospective financial information was prepared, to demonstrate that okay, events, everything, data has been considered till this date. So the date is very important. Assumptions till this particular date have been taken. Date, very important. Basis of establishing range. Now what happens is, at times it may not be possible to have a point estimate, that we have seen in SA 540 also, that it is not feasible to have point estimates. At that point in time, a range can be used. Now let's say, for example, you have given a range for the sales, you may give a range for a cost, you may give a range for the profit. In that case, whenever these kind of scenarios are there where you are providing range or a particular numbers in the range, then at that point in time you need to demonstrate that okay, you need to check that this particular range is clearly indicated, range is not selected on the basis of any biasness, something like that. Okay, let's say, for example, I was getting estimates near to 100 and 110, but I took a range of 100 to 150 to show that okay, no, it can go to 150. that is misleading. You are taking a very big range. So whenever range is being used, you need to see that it should not be misleading. The range is clearly indicated and it should not be misleading. And then if you are considering any change in the accounting policy compared to what was applied in the historical financial information, reason of the change, effect of the change. If there's a change in accounting policy, reason of the change and the effect of the change. These are the bare minimum you need to check. Apart from that, there are other things, but this is a bare minimum. You need to check in the prospective financial information. Now we will come to our report that we are going to issue on this particular prospective financial information. So again, we will discuss the bare minimum points or bare minimum sections that our report should have. Okay. As usual, the first thing in our report, title, addressee. A title should be there, addressee should be there. Second, once you have a title and addressee, you need to identify what prospective financial information is there on which you are issuing an opinion. So identification of the prospective financial information that we are seeing, every time, historical financial information, interim financial information, your general purpose financial statement, every time we identify in the first paragraph. So as of now, I think everyone should have that kind of, clarity that how we identify. Then reference to the standards on auditing, if those are applicable over here. Okay. With respect to this prospective financial information, means you need to give reference to the SAE. Important, that is a management responsibility to prepare a prospective financial information. Second, reference to the purpose or distribution. Like if it is, if we are preparing for a specific scenario, if we are, management is preparing for a specific scenario, and if it is for the restricted distribution, that should be specified in the report. Then our responsibility, and one important thing, that we are performing examination procedures, fine, but these examination procedures are on test basis. Okay, these examination procedures are on test basis. Okay, and evidence supporting the assumptions, amounts and other disclosures in the forecast and the projections, they are not full-fledged examination. It is on the test basis, and that is to only supporting the evidence regarding the assumptions. We are not talking about accuracy of the forecast. No. We are not we are not talking about accuracy of the forecast. We are talking about evidence supporting the assumptions. Then a statement of the negative assurance, whether assumptions provide a reasonable basis for the prospective financial information or not. Kind of a negative statement, negative assurance statement we are issuing over here. Negative kind of statement that based on our examination procedures and based on the information or evidence collected, we have not identified anything which can lead us to believe that the hypothetical assumptions or best estimate assumptions do not provide a reasonable basis for the prospective financial information. Something similar. A negative statement. This is kind of your opinion over here in negative assurance form. Then if any financial reporting framework is there, then opinion as to whether the financial information, prospective financial information is prepared basis the assumptions and presented accordance with the relevant financial reporting framework. See, there are two things over here. When we are talking about the assumptions, reasonableness of the assumptions, we are kind of giving a negative assurance statement. But when it comes to the compliance with the relevant financial reporting framework, whether they are presented at that point in time, I need to issue opinion properly whether they are in compliance with the present, whether they are presented in in compliance with the relevant financial reporting framework or not. So this is again second opinion, you can say, or second part of opinion could be in a positive way on your compliance with your relevant financial reporting framework. Okay, so that is the second part of the opinion. And then you have the caveats whichever are there. For example, if management has taken some assumptions, if management has taken something, for example, like, okay, very big assumptions, kind of caveats, like we assume this to be this to be this, you need to provide those caveats over here also. And then your DSP, date, place, and signature. So this is how your reports should be. Any doubt with respect to this one?
Sir,
Yes.
रिगार्डिंग प्रेजेंटेशन आपने बताया था कि शायद कभी कभी ऐसा हो सकता है कि उसके लिए कोई प्रॉपर फाइनेंशियल रिपोर्टिंग फ्रेमवर्क ना हो.
Yes.
इन दैट केस हम हमारा ओपिनियन रिगार्डिंग प्रेजेंटेशन एंड प्रिपरेशन के लिए हम कैसा सेंटेंस वर्क करेंगे?
In that case, let's say, for example, when there is no financial reporting framework involved, I will not, give this particular kind of statement.
मीन्स उसके प्रेजेंटेशन और प्रिपरेशन के बारे में कुछ भी नहीं बोलना है?
Then in that case, I may choose to report in a way like, okay, in our opinion, the forecast or the projection with the notes are properly prepared on the basis of the assumptions which are there, okay, are consistent with the historical financial statement, or I can say are presented properly as per the generally accepted accounting principles, something like that. But again, if you have to give on the presentation and disclosure, the thing you can disclose is that these assumptions are disclosed appropriately. You can mention something on this particular line, or you can mention that, okay, these are not misleading, basically.
Okay, sir.
So I can, have a statement when, there is no relevant financial reporting framework. I can still have a statement that whether is anything, came to my attention which can lead us to believe to me that whether these prospective financial statements are misleading or not, something or similar on similar lines.
Clear, sir.
So, basically, again, it goes back to what kind of engagement and what is the purpose behind the engagement. Let's say if the forecasts are prepared, okay, for a bank where the terms and conditions of the contract with the bank or, loan agreements is something that, forecasts are required to be prepared on the basis of historical financial statements, the way historical financial statements were prepared. So my opinion might contain some, wordings with on the similar lines as the agreement requires. Clear?
Yes, sir.
Yeah. So that was your SAE 3400 examination of prospective financial information. Now here again, as I said, okay, we have to specify that this is something based on the assumptions. This is not on the opinion, or this is not actually something which is saying that, okay, this is kind of assurance about the actual results or assurance about the future viability of the particular company or whatever entity it is. So we need to make sure that we have this kind of statement in our report. Okay, that uh, that this particular information is based on the assumptions. Actual results may be different, may give you a different scenario. Okay, and again you need to specify that these are prospective financial information, and are based on the hypothetical assumptions about the future, and do not represent kind of, you can say, that is viability of the future performance of the company. So these kind of statements should always be there in your report. Clear? So that was your basically SAE 3400 examination of the prospective financial information. Any doubt till now?
No, sir.
Okay. Basically, the important point and the important aspect here was to understand what is prospective financial information and what are the key steps involved when it comes to the what is the objective of the auditor, key steps in that or key areas in that. Engagement, agreeing the engagement, apart from compliance with the SA 200, which I'm not going to repeat, but there is something different beyond SA 210 involved over here. And with respect to the minimum points of presentation and disclosure. Okay, if no further doubts, let's proceed further. I want to discuss the next assurance engagement. Now that is SAE 3420. Now what is this? Basically, this particular engagement is assurance report on the controls at the service organization. Its corresponding SA, I would say, would be your SA 402. Remember SA 402? Yes or no? Yes? SA 402?
Yes, sir. Entity using service organization.
Yes. Now, remember over there we were talking about type 1, type 2 report, type 1, type 2 report. We were talking about, no, there could be a service auditor involved who will give us the type 1 or type 2 report at the time of planning. Remember? We were discussing all these terms and all these scenarios.
Yes, sir.
Now, we discussed that, okay, type 1, the service organization auditor can be a charter accountant, maybe outside India, may not be a charter accountant. Okay, so there were two scenarios, and we discussed that if he's a charter accountant, then there is something we can leave. Okay, we can choose. Okay, the report might be appropriate with respect to the professional standards and everything. So we are not required to go on the capability competency of the service organization auditor. Otherwise, we need to also check whether the report is appropriate or not. So there were some things that we discussed at that point in time with respect to the service organization auditor. I hope you remember those things.
Yes, sir.
So, see, over there we were talking about service organizer or auditor being member of institute. Means a member of institute can issue type 1, type 2 report. Now, when you are what standard you need to comply with and how you need to issue the type 1 and type 2 report is basically governed by SAE 3402. How to use that report? SA 402. How to issue that report? SAE 3402. Are you getting the point? So both sides are now there in front of you. One, we were talking about like, okay, how to use the report of the service organization auditor, service auditor. Second, now we will talk about how to issue that report as a service auditor. Okay, so quickly tell me what was type 1 report. Let's do a quick recap of that. What was type 1 report?
Type 1 report was whether management की जो internal control system है, they are talking about just the design and their implementation as of a particular specific date. And under type 2, they were talking about their operating efficiency during a period.
Yes, very good. Very good. So type 1 report we were talking about as on a specific date. Okay, design of the controls that could be relevant for the your company as a user entity. Okay, so controls as a service organization that are relevant for the user entity. And in type 2, we are not only talking about the design of those controls, we were talking about operating effectiveness throughout a particular period. Okay, that was a type 2 report. Type 1, type 2 report. Now, again, if you are required to issue type 1, type 2 report, accordingly, your basically your engagement will differ. Okay, so let's say for example you are only reporting on the description of the controls at the service organization, your engagement is bit different when you are reporting with the description, your operating effectiveness, and the other things which are involved. Okay, so this is how basically your engagement might be. Now let's talk about when there are certain scenarios which are not covered by this particular standard, that is SAE 3402. Okay, so 3402 is applicable only when the service organization is responsible for the suitability of the design of the controls. Okay, when the service organization is only responsible for this. Now this particular type of this particular standard does not deal, again a very important point, this particular standard does not deal in scenarios where you have to report only on the controls of the service organizations, how they were operating effectively. Means you are not reporting on the design. Again, this particular this particular standard will not be applicable on the scenarios where you are only reporting on the controls at the service organization operated at described. Means operated like how they were operated, that's it. If you are reporting in such a way, that will not covered by this particular standard. Reason because there is a use of type 1 and type 2 report. If I give in my report that okay, these were the controls and this is how they operated, what I'm going to convey with that? I'm not conveying anything under the report. I'm not conveying that whether the design is appropriate or not, whether they were operating effectively or not. I'm just talking about control A. Control A worked in this way. Like this was flowing from there, this was flowing from there, this was doing from here and there. That's it. I'm not talking about appropriateness of the controls or the design. I'm not talking about effectiveness of the design. I'm not talking about effectiveness of the operations of the control. In that case, that report cannot be used as a type 1, type 2 report. So that will not be covered by SAE 340. Clear? Yes or no?
Yes, sir.
Okay. So when it is a report on whether the controls at the service organization were operated as we have described in the report, at that point in time, this particular standard will not be applicable. Second, if we are reporting on the controls of the service organization, which are not related to the user entities, again, so see what happens in SA 402, or when we are having entities who are using service organization. The prime and important thing is I rely on the control of service organization. Yes or no? So whenever an auditor, let's say there is an audit, I'll explain you with an example. See, let's assume these are the controls of service organization. Controls at service organization. Now these could be HR related controls, these could be financial related controls, these could be, let's say, treasury related controls, these could be FA related controls. Multiple controls can be there. Now this is, let's say there is one user entity. I hope you are aware what is an user entity. Okay.
Yes, sir.
So let's say
Which has outsourced its function to the service organization.
yes. So let's say this is one user entity. Now user entity has outsourced payroll function to this service organization. Okay. So they have outsourced the payroll function to this service organization. Now here, the HR related function, HR related controls, sorry, my bad. HR related controls are something on which the user entity will rely on. So these particular controls are relevant from the point of view of your user entity. Okay. So user entity will rely on these controls. Fine. Now, what will happen is, let's say there is only one particular entity which has outsourced to this service organization. There is no other user entity, only one client for this particular service organization, only one customer. Now, tell me, apart from this HR controls, when I talk about these finance or these, your treasury, FA controls, these are the controls which are not relied by any user entity. Yes or no? So no user entity is relying on these controls. Is relying on these controls. Okay. So these are not related to any user entity. Yes or no? Clear till now?
Yes, sir.
Now, if there is an engagement to report on these controls, which are not being relied by user entity, then this particular engagement will not fall under the SAE 3420 or 02. Reason because if these controls are not relevant for the user entity, then this standard basically only governs type 1, type 2 report. If I summarize, this standard governs a report. This standard talks about a report which can be used by the user entity. If these controls are not relevant for any of the user entity, then I cannot call this particular report as a type 1, type 2 report. Then in that case, this particular engagement to report on the controls which are not relevant for the user entity will not fall part of SAE 3402. 3402, yeah. Are you getting the point?
Yes, sir.
So, any other control at the service organization other than those related to the service that is relevant for the user entity, okay, in that case, that will also not be covered by SAE 3402. So these are the two particular scenarios which will not be covered by the SAE 3402. You can consider kind of exceptions or exclusions from SAE 3402. So where when you only report as described, okay, so you are reporting controls as described. You are not talking about appropriateness, you are not talking about effectiveness in your report. In that case, not relevant. This will not form part of this particular standard. Second, you are reporting only on the controls at the service organization other than it relates to the user entity, will not form part of this particular standard. Clear with this?
Yes, sir.
Yeah. So what we do is, let's take a quick 10-minute break. After the break, we will jump and deep dive that how the type 1, type 2 engagements are performed. Trust me, it is not that much difficult. If you understood the scope, if you understood the engagement, everything, then we will be application of what we have learned till now in a modified way. Okay, so let's take a quick 10-minute break. After the break, we'll gather back and we'll continue the session. continue the session, guys. Okay. As of now, any doubt till on whatever we have discussed till now? Any doubt? No? No issues. Let's continue the session and understand. See, we'll do a quick recap of type 1, type 2 report. Okay, what type 1 includes, what type 2 includes, and then we will proceed with the engagement for each. What type 1 includes? Basically a written assertion, because this is something, at the end will define what kind of report you are going to issue, like how you are going to issue. So type 1 includes a written assertion about the service organization, or a written assertion by the service organization with respect to the description of the service organization systems. Second, controls related to the objectives which are stated in that service organization's systems description, okay, at a specified date. That is a type 1 report basically. And assurance on that the 1 and 2 points are appropriate, so reasonable assurance on that basically. Number 2, type 2 report. What type 2 reports involves? Whatever we have seen in type 1, okay, whatever is there in the type 1 is there in the type 2 also, plus, so this is nothing but your type 1 over here, plus you have another important aspect, that is the controls, okay, which are stated in the objectives, or where stated in here A point, okay, these controls, whether they were operating effectively throughout a specified period, and an assurance on these 2 points, that number 1, on the description, this controls which are specified in the objectives were suitably design effectiveness, okay. Second, description of the test of the controls and their results, kind of operating effectiveness. So these 2 things are there in your type 2 report. Now this is type 1, type 2 report, a quick recap. Now, how to proceed with an engagement? How do you proceed with a normal engagement, normal audit engagement, guys? How do you proceed? Like if I ask you the steps involved in audit, major steps, can anyone tell me?
Sir, is your question relating to SA 402 or just a normal audit procedure?
Audit. My question is, how do you proceed in a scenario of a normal audit? What do you do? Step by step, some brief about the steps. Like I do this, then this, then this, then this, and the final, then reporting. So some steps.
I obtain understanding about the entity, its management behavior, and after that I do risk assessment. According to that, I decide upon audit procedures to be followed, nature of audit procedures to be done, nature, timing, extent, and of course, accordingly the nature, timing, extent of audit evidence to be obtained. And if there is any communication to be made with management and those charged with governance about the internal controls or about any deficiencies or any material matter that they have to discuss with them. They have a discussion upon them. After that, if he has any suggestion or any updation or correction to be made in financial statement, he speak about that with management and make sure that they are made. And after that, and ending, if he consider that everything is fine, he has obtained sufficient and appropriate audit evidence. Accordingly, he give his audit report.
Yes, very good, very good. So here you have just specified what you do in the audit, and the same is applicable what you do in this particular engagement. So I'll take you quickly. First, you will check your ethical requirements the way we do. Determination of the management and those charged with governance for communication. Again, the way we do identification of management and those charged with governance, SA 260. Accepting the term, SA 210. You do the assessing the suitability of the criteria. Basically, remember when we were discussing SA 315, we were talking about various type of internal control frameworks. Over here, we will assess which is the suitable one that the management has followed. Kind of financial reporting frameworks for control, not for financial statement, but for controls. Reporting framework, the way we have a financial reporting framework for financial statement, control framework for the controls. So suitability of the control framework. Okay, then you determine the materiality, then you understand the entity, you obtain the evidence, you perform the testing, you design the procedures over there, like what procedures you need to perform, SA 330, 315. Okay. You may ask for the written representations, understanding the internal audit function, whatever we have done, okay, till now. Subsequent events, if there are any subsequent events in the entity, everything, whatever we have discussed till now is applicable over here. Do you think I have provided or I have discussed any new topic that you don't know?
No, sir.
Yes, that's it. So this particular engagement, the important point was to understand what is included, what is not included in this particular standards engagement, and what is the reporting part. See, performance of the particular engagement or gathering the sufficient and appropriate evidence on an average will remain same, because at the end these are assurance engagements. Whatever you have learned with respect to the assurance, with respect to the procedures related to the audit, can be applied to the assurance engagement in a bit of modified way. It is not like that you cannot apply those procedures, those concepts and logical understanding over here. No. And then these are also assurance engagements, so that will be applicable. Yes, some modifications might be there, but primarily those principles, those concepts will applicable over here. Any doubt with this? Any doubt?
No, sir.
Okay. Now, coming to the next and very important part is your reporting. See, we know when it comes to the when it comes to the reporting, we know either it could be a type 1 report or a type 2 report. Okay, so we know any type of report could be there. Now the question here is, are there any additional things that we might need to report as per the engagement as under this particular standard? So in that case, yes, there are bare minimum things, just like we have seen in other standards. There are bare minimum things which are applicable here also. Okay, and we will see that what are these bare minimum reporting requirements. As usual, when we start with a title and address, addressee to whom we are reporting. Then we have the identification. Now here, unlike earlier we were doing engagements with respect to historical financial information, prospective financial information, general purpose financial statement. Over there we were identifying those statements, those informations. Here what we will do identification. We will do identification of what we are on which we are issuing an opinion. Okay, so we will identify the system and description of the system of service organization. Okay, we will talk about type 1, type 2 report, the matters which are included in type 1, type 2 report. Okay, we will talk about that need for the complementary user entity controls. Now, what is complementary user entity controls? Anyone? Complementary user entity controls? Come on, guys. We have discussed this in SA 402. This is not something new that I'm bringing it here. Come on, quickly.
If the task that is performed at service organization is subject to control of the user entity, then we call it as a complementary user entity control.
Yes, absolutely correct. So, where some of the controls of the user entity are involved, okay, and that particular controls, are, being kind of, coming into the checkpoint way, or they are, also in the picture when the data or when anything, is provided by the service organization. Means not only the service organization's controls are relevant, but the user entities controls, some certain controls are relevant. For example, whenever payroll data comes to me, I also perform sub checking at my end in my organization. So this is complementary user entity control. So if something is in user entity, then auditor needs to identify that, okay, these are the user entity control, complementary user entity control, and this is not covered by me because I am the service auditor. How I can cover user entity controls? Although there might be some process which might be dependent upon the complementary user entity controls, okay, as per the agreement with the user entity. For example, let's say I agreed with the user entity that, okay, I will process the data, but you have to check at your end also once. So that is a complementary user entity control. So if there are such agreements, there are such controls in place, I need to specify that, okay, there are these user entity controls, and for that I am not responsible. Sorry, that is something, a user entity auditor will check, because I have not evaluated suitability of the design and operating effectiveness of those complementary user entity control, because I'm at the service organization. Okay. And if there is any sub-service organization involved, means when the service organization has outsourced its activities to sub-service organization, sub-outsourcing. In that case, description of that particular sub-service organization, services and its system, everything will be in a similar way. So that is the identification part that you need to do. Then comes the identification of the criteria. As I said, control framework that is involved. And then the statements. Okay, like a statement that the type 2 report is for the user entity and their auditors. Okay, it's not for anyone else. As I told you in the start, that okay, if these controls are not related to user entity, a report on that will not be issued under this particular standard. So you have to specify that this is for the user entity. This report is to be interpreted, it's to be read by the user entity. It's not for anyone else. Okay. Then again, as usual, management responsibility. What is the management responsibility with respect to the preparation of the system description, maintenance of the internal controls, stating the control objectives, achieving the control objectives, and everything with respect to internal controls. What is the management responsibility, and what is the service auditor's responsibility? I specify that. So service auditor's responsibility is something to issue opinion, whether it's a type 1 or type 2. According to that, issue opinion, and then I specify what is the management's responsibility. Then a paragraph to state that this is in accordance with SAE 3402. I need to give the reference to the standards. Then I need to provide a summary, okay, of the procedures that I have performed to achieve this particular kind of order, or to issue this kind of opinion. Remember, in type 2 report, we also, the auditor is required to specify the procedures performed and the outcome of the procedures. Yes or no? In type 2 report, we discussed that we do not only report on the operating effectiveness, but the procedures performed and the outcome of the procedures, so that the user auditor can understand what procedures were performed and whether they are appropriate for his work or not. Okay, so the description or the summary on that particular, a statement on that particular area, that what procedures we as a service auditor I have performed here and what was the outcome of these procedures. Okay, and then I need to specify whatever my type is there, type 1, type 2, whatever type of report is there, I need to specify that. Then DSP, date, signature and place. So this is how your report under SAE 3402 is issued. Any doubt? Any doubts till now?
No, sir.
Okay. Okay, no issues. If no doubts, then fine. We can proceed further also. Okay. Now, this is what we have discussed with respect to SAE 3402. Modifications, if you have identified anything with respect to observations with respect to any of the matters which requires modification, then you have to specify that. So there could be modified opinions the way we have seen in others. Here also there would be a modified opinion. So that was your report under SAE 3402.
Sir, while reporting, is it necessary to mention every time that this is type 1 report or type 2 report?
Yes. Otherwise, how basically the auditor of the service user entity will able to understand what kind of report it is.
Okay, sir.
Any further doubt, guys? Any further doubt? No? Okay. If no further doubts, no issues, we can proceed forward. Okay, we can proceed ahead. I hope you have understood the first two standards, 3400, 3402. Okay, which basically we have discussed, on the assurance engagement. One was prospective financial information. Second was your service organization's report, type 1, type 2 report. Now we will go to next standard, that is again specific scenario based, that is 3420. Now what this standard talks about, this is an assurance engagement to report on the compilation of pro forma financial information. If there is a pro forma financial information which is your included in your prospectus, and on that if there is an engagement to issue report on that, in that case this particular standard will be followed. Are you getting the point? So if there is a pro forma financial information and if there is a report on that pro forma financial information, in that case this particular standard is followed. Clear with this? Now here when we will go and we will perform a deep dive in this particular standard, what we will do is we will basically understand that, okay, how these assurance engagement are taken. Number two, here we will not say auditor, we will say practitioner, because when it comes to the pro forma financial information, here it will be practitioner, not auditor. Number two, here it may be a responsible party. We may not call them that management or those charged with governance. So these two changes will be there in this particular standard. Now, why we are saying practitioner? Number one, because here this particular report is on the compilation of pro forma financial information. We will understand what is pro forma financial information and what is required to be done when it comes to pro forma financial information. Okay, but again, this is pro forma financial information, which is different from your general purpose financial statements. As a result, that's why we are using the term practitioner over here. Okay. Now, if you have read about this particular chapter, you have read earlier also, let's say you did a reading, then tell me what is pro forma financial information. Can anyone tell me that? What is pro forma financial information? Anyone? Yes, no? No? Okay. Basically, when I talk about pro forma financial information, these are the financial informations which are included in your prospectus. Okay, kind of a adjusted information, financial information. Okay, basically what happens is you have your general purpose financial statement. These are unadjusted financial informations. Now, when you issue prospectus, okay, as per the requirements, you are required to include restated information in your prospectus. I'm not sure how many of you have read any of the prospectus or these requirements, but you are required to include restated financial statements in your prospectus. Okay. Now, what these restated financial statements do? What is the purpose of these restated financial statements? The purpose here is to demonstrate some of the adjustments or events if they would have happened earlier. Are you understanding? The purpose here is that if these events would have happened earlier, then what would your financial statement would have been looked like? Some kind of adjustment, as of now, you can say. Okay. So once you pass adjustments on the unadjusted financial information, then you issue this kind of pro forma financial information in your prospectus. So there are options, kind of where you need to issue, where you not need to issue. So I'll not go on the regulation side as of now, but understand. So there is one requirement also. Now, when there is an assurance engagement, okay, when there is an assurance engagement on these pro forma financial information, that engagement is taken or undertaken as per the standard 3402, where a practitioner issues the report that whether the adjustment are done appropriately or not. Okay, so he looks into these adjustments basically. kind of jigging. Yes, you can say events, past events, but events how they would have impacted if this would have happened earlier. Okay, so if that is here again a reasonable assurance engagement is undertaken.
यानी कि सर जो इवेंट्स हुई नहीं है ऐसा कि अगर हुई होती तो
if that event would have happened earlier. So let's say, for example, I will show you one example. Let's say you have a financial statement as on 31st March 2023. Okay. Now let's say some event occurred after 31st March 2023, subsequent event.
yes
Now
sir
what I will do is I'll take up that event. I will assume no, this has not happened after 31st March, but it happened on 1st April 2022. Then how the financials of 31, 30, how the financials would have looked on 31st March 2023? Are you getting the point?
अगर वो सब्सिक्वेंट इवेंट में नहीं हुई होती 31 मार्च से पहले अगर वो इवेंट हुआ होता तो वो हमारे फाइनेंशियल स्टेटमेंट को कैसे इम्पेक्ट करता
Exactly.
ओके सर
So accordingly, I show, okay, what is the impact of or what is the adjusted financial information.
यस सर क्लियर
Now, if there is an assurance engagement to report on, where the practitioner is required to report whether these adjustments are appropriate or not. In that case, this particular engagement is carried as per the standard 3420. My mistake. Standard 3402 20. Okay. In that case, this particular standard is being followed to issue the report. So the purpose here basically is that when the practitioner, performs an assurance engagement, here he issues a reasonable assurance whether the pro forma financial information has been compiled in all material respect as per the applicable criteria. So whether the pro forma adjustments are made appropriately or not. Okay. For example, let's say, some investment or divestments have happened. So how they would have reflected if they would have happened earlier. So kind of that information. So he has to analyze those particular adjustments. And then he need to report whether these pro forma financial informations are as required as per the criteria or not. Now, what is the criteria? Criteria can be your basically, any specific requirement. It may be law, regulation. It may be prescribed by management also. If law or regulation does not specify how to prepare pro forma financial information or how to compile the pro forma financial information, in that case, management decides it and that becomes the criteria. But usually, law or regulation decides that how to compile the pro forma financial information. An auditor has to report whether these pro forma financial information have been compiled appropriately or not. I hope you are getting the point what I'm what we are discussing over here.
Yes, sir.
Now, as the objective, of the auditor to, get to issue a to issue a reasonable, to get the reasonable assurance and to issue the opinion with respect to this point. Over here, in order to issue an opinion, okay, and to obtain reasonable assurance, what auditor is required to do is I need to understand first what is my pro forma financial information and what are the pro forma adjustments that are being done on the unadjusted financial information. Basically, you have unadjusted financial information, you add pro forma adjustment on that, and you get the pro forma financial information. So you need to understand all these three things before you enter into the engagement. So before accepting or agreeing the engagement, you have to determine what is the pro forma financial information that will be included in your prospectus. What are the adjustments that are required to be made, and accordingly you need to understand what is the scope of the engagement accordingly. Then the rest of the part of the accepting the engagement is that whether I do have the competency capabilities to perform the engagement, whether I have any knowledge of any circumstance that that is stopping me from accepting the engagement, whether the responsible party, or you can say the management, or those charged with governance. I will not use the term management or those charged with governance. I will use the term responsible party over here. Whether the responsible party is aware about the criteria that based on which the pro forma financial information is required to be compiled with, or is there any misleading information that is I have a preliminary knowledge about, how I am required to issue the opinion, is there any law which prescribes the wordings of the opinion, is there any conflict between the law, regulation, or the standard. Usually there are no conflicts involved, but again, these are the things I need to understand. Okay, so when I take unadjusted financial information, or when I when management tells me, okay, this is unadjusted financial information, I need to consider whether there was a modified opinion on that unadjusted financial information, whether there was any going concern paragraph, any emphasis of matter paragraph, other matter paragraph, anything that was there in that unadjusted financial information that could be important from my procedures point of view, that I should have the understanding of, whether it is audited information or not. Sometimes the unadjusted financial information is not audited. Then if it is not audited, then who has prepared that information? So you need to understand these things before you accept the agreement or engagement. And rest of the things like complying with the similar things which we have seen in SA 210 is there. You accept the engagement as per SA 210. Similar concepts I will apply here also. I then do the planning performance, I obtain written representations, I form an opinion. These are the steps involved in this engagement also. Similar. Okay, so if I talk about after acceptance the engagement, the way we have discussed in all these scenarios, all same. Like I will plan, perform, written representations, opinions, and issuance of report. And when I talk about planning and performing, it is similar that we have seen. Okay, I will basically here my audit procedures, my understanding, everything will revolve around unadjusted financial information, pro forma adjustments, criteria, presentation disclosure of your pro forma financial information. So my procedures, my understanding, my any evidence collection will be around these areas only. For example, I may understand about the criteria, suitability of the criteria, sources from where the financial information have been obtained, understanding the entity so that I can understand the unadjusted financial information, transactions or events that are leading to the pro forma financial information, obtaining the agreement of the entity, their management's responsibility, or here I would say responsible party's responsibility. Okay, everything that I'm discussing will remain the same. I will assess the suitability of the criteria. Okay, what is the criteria, whether is there any conflict, whether there is no conflict, okay, whether the there is a clear-cut understanding of the framework that is involved into this. Okay, I will understand the materiality, I will determine the materiality for this particular engagement. based on the understanding, okay, what could be the areas, or how much, if I talk about in terms of amount, what could be the materiality, what is going to impact the decision making of the users. So something like that, I will do the materiality assessment over here. I will obtain an understanding of how the management, means the responsible party over here, has compiled the pro forma financial information, because I am issuing assurance. I am not compiling the pro forma financial information. Pro forma financial information is being compiled by the responsible party. That is, like you say management, but here we will use the term responsible party. Now, how they have compiled this pro forma financial information? Have they considered subsequent events? Have they considered the modifications which were there on the unadjusted financial information? Have they considered any other factors that are required to be considered? Okay, and what pro forma adjustment they have passed in this particular information? Then I will ask, okay, tell me or give me the evidence about the appropriateness of the pro forma financial adjustments. What adjustment you have passed? You give me evidence how you have passed these adjustment. What is the source of these adjustment? From where the data is coming? So I will perform procedures around that adjustments. Okay. I will check whether the entity's accounting policies are applied in adjustment in appropriate way, the way they should be applied. Okay. If there is a modified audit opinion or conclusions or anything on the unadjusted financial information, then how it is impacting on my pro forma financial information. So that particular thing I will understand. I may choose to perform additional procedures if there is a modification on a critical area, okay, which is relevant from my pro forma financial information. Also, I may choose to perform some additional procedures. Okay, and then I at the end will issue opinion. Now, what kind of opinion I will issue? I will issue either unmodified opinion or modified opinion. Unmodified opinion means everything is fine. Okay, where a practitioner concludes that pro forma financial information has been complied in all material respects, because it's a compliance framework engagement. Modified opinion, if I have identified something which is not compiled appropriately, so I need to report to that particular part. Okay, except for this, everything is complied. Now, if modified opinions are basically when there is a modified opinion, I need to also communicate to the responsible party, the way we do in audit. Okay, so these are the terms, or these are the things which are giving rise to the modification. So please consider this. Now, another thing we need to understand is whether the law or regulations allow publication of a prospectus which contains a modified opinion. Sometimes law or regulation might not allow. In that case, how will you deal with that scenario? Let's say law says that prospectus with the modified opinion should not be published. Now, the only option is you ask management to rectify that particular areas. In that case, management might agree, might not agree. If they agree, perfectly fine. If they do not agree, means you are in a scenario where law doesn't allow you to issue modified opinion, plus management is also not agreeing to rectify. The only option in that case is either you withdraw from the engagement. If withdrawal not possible, then consider seeking legal advice. Clear? Any doubt till now?
Sir,
Yes.
this report is related to the prospectus issuance है ना?
Yes.
तो ये यानी जो मैनेजमेंट है या फिर रिस्पॉन्सिबल पार्टी है वो हर साल इशू करेगी या फिर सिर्फ
So these kind of informations or these kind of statements are in their prospectus. So whenever a prospectus is issued, these kind of informations are in that particular prospectus.
यानी कि जब भी रिक्वायरमेंट होगी तभी ये एक स्पेशल पर्पस रिपोर्ट की तरह है ये.
Yes.
यस सर. क्लियर सर.
Any other doubts? Any doubt, guys?
No, sir.
Okay. Now, the thing is, there is one more point that we need to discuss over here is that emphasis of matter paragraph. Usually, these kind of reports have the emphasis of matter paragraph where you draw attention of the user that, okay, this is the pro forma financial information. Okay. And what are the basis of this pro forma financial information. So you draw attention of the users that this is not something general purpose financial statement, or this is not a financial statement, but this is the pro forma financial information. So that kind of emphasis of matter paragraph you provide in your audit report or in your opinion. Basically, what happens is in pro forma financial information, you are only obtaining evidence about the adjustments, okay, and the source of the unadjusted financial information. So let's say you have taken the audited financial statement as on 31st March 2024. You identified the source, okay, the source is audit report. Then there was these adjustment, you verified the evidence about this adjustment, and then it becomes a pro forma financial information. But nowhere you included any evidence, or nowhere you obtained any evidence regarding the unadjusted financial information. Did you perform any procedure on the unadjusted financial information? Answer is no. I have not performed any procedure on the unadjusted financial information. I have identified the source from where it is coming, like let's say audit report, if they are audited. So I am relying upon the audit report. But have I obtained the sufficient and appropriate audit evidence to conclude that the unadjusted financial information is correct? No. So in that case, you need to specify in your emphasis of matter paragraph that basically your report is basically on the kind of pro forma financial information, unadjusted financial pro forma financial information and pro forma financial adjustments, not on the unadjusted financial information. Okay, so anything beyond your pro forma financial information might not be covered by your opinion. That is something you need to specify in your emphasis of matter paragraph. Clear with this, the emphasis of matter paragraph?
Sir,
Yes.
the emphasis of matter paragraph, this point has been mentioned in the module. Over there, I am having a doubt in some lines.
Yes, tell me.
On page number 11.28, if you could go.
Okay.
There they mentioned that practitioner shall include the emphasis of matter paragraph provided practitioner has obtained sufficient appropriate audit evidence that the matter does not affect whether the pro forma financial information has been compiled with all material displayed. मतलब मुझे ये समझ में नहीं आ रहा exactly इनका बोलना क्या चाहते हैं वो.
Okay, what they are saying is the practitioner shall include an emphasis of the matter paragraph in the practitioner's report that the practitioner has obtained evidence that the matter here, okay, what you can say is the matter means this particular emphasis that I'm placing an emphasis whether this pro forma financial information has been complied or not. Apart from that, am I reporting to anything? The way I was saying that my opinion is on only pro forma financial information, not on anything else. My evidence collection is on pro forma financial information. Have I collected any other evidence? Answer is no. So that is being, highlighted over here, that I have obtained sufficient and appropriate evidence about that pro forma financial information and its compilation. If you ask me, do I have obtained sufficient and appropriate audit evidence about the completeness and accuracy of the unadjusted financial information? No. I am only talking about compilation as per the suitable criteria of pro forma financial information. Anything beyond that or anything before that, I am not responsible for.
Okay.
So that is kind of emphasis you are placing in this particular paragraph. Are you getting the point over here?
Yes sir, means they are trying to say अगर ये सही है या नहीं जो सेंस में मैंने इसको समझा है, that the emphasis of matter paragraph को include करने की वजह से वो उनके ओपिनियन में कोई सब्जेक्ट या क्वालिफिकेशन नहीं ला रहे हैं, ऐसा उसका मतलब है क्या?
Yes. So see, any which ways, we at the end write that our opinion is not modified in this particular matter or in this particular regard. If you have emphasis of matter paragraph, other matter paragraph, you always state that okay, our opinion is not modified in this respect.
Yes sir,
At the
clear.
end. So one sentence is always there. So you have to, any which ways, that have to be mentioned. But at the end, our opinion or whatever emphasis I'm placing that okay, this is what kind of emphasis I'm placing over here, the particular matter. So it is kind of, you can say, it is similar to what we have seen in SA 706. When you prepare your emphasis of matter paragraph, you are bringing attention of the user to any particular point which is fundamental to the user understanding and which is already there in your pro forma financial information. Okay. But am I qualifying my opinion? Answer is no. Am I qualifying any particular, am I modifying my opinion? Answer is no. Similar to on that particular point. Okay. Now, any further doubts to this? Any further doubt? Okay. Now, we will understand the breakup or the bare minimum basic elements of the audit report. Okay. These are the basic elements of the audit report that is required to be there. Not the audit report, basically assurance report or report that will be issued under this particular engagement. Okay. So what are these basic elements? As usual, we will start with the title and addressee. Second, identification. Everywhere, remember that we will identify. Now here, what we will identify? Pro forma financial information, the source from where the unadjusted financial information is gathered, the period covered by those pro forma financial information, and the reference of the applicable criteria based on which the compilation has been done. These four things are identified. Okay. So your pro forma financial information, then comes your source of the unadjusted financial information, then comes the period, and then comes the criteria. Identification is always there. The way we have seen identification in other scenarios, similarly identification is there. Then a statement that the responsible party is responsible for the compilation, kind of management responsibility. Simply, if I tell you, it's a management responsibility that they are responsible for the compiling the pro forma financial information. Then what is the next point is that here after this, a description of the practitioner's responsibility. What is the responsibility of the practitioner? Practitioner's responsibility to express an opinion whether this information has been compiled appropriately or not with respect to the criteria. Okay. Now here, He's not reissuing, updating, or any historical opinions. Again, that's why that I was talking about. Here, he is not issuing or updating any opinion. Very important point, because this is the report on the pro forma financial information, not on the unadjusted financial information or historical financial information. So we are not responsible as an auditor to update or issue any report or opinion on the historical financial information. No, it is not my responsibility. Okay, my responsibility is only with respect to compilation of pro forma financial information. That's it. And this financial information will be included in the prospectus to illustrate the impact of significant event. If you use this information for any other purpose, sorry, I'm not responsible for that. So accordingly, auditor is not providing, or the practitioner is not providing any assurance of the actual outcome of that particular transaction. Okay, so again, what we are doing is we are taking a transaction and we are taking it to the back, or management is taking that transaction back to the some other date, how it would have affected or reflected basically. Okay, but that doesn't mean that we are predicting an outcome for that particular transaction. No. So actual outcome of the event of that transaction at that date, we are just seeing that how it is being compiled. Okay, we are not providing any assurance on the outcome. Understand that we are providing assurance on the compilation, not on the outcome. Then a statement that this particular engagement is performed as per 3420. Okay, and then you specify what is a reasonable assurance engagement. The way you have specified in audit, we have seen this in audit also, that what is a reasonable assurance engagement, you specify about the reasonable assurance. Similar here, you specify here also. Then procedures, how you have selected the procedures, what procedures you have performed. Again, in the audit report also, you see we specify about the procedures. Similar way, we are also specifying about the procedures. Okay, what is the responsibility of the practitioner and what procedures he has performed. Okay, and the opinion. Now, opinion, again, basically, whether in all material respect the pro forma financial information has been compiled or not. Okay, and the criteria, about the criteria. So based on that, you need to issue your opinion. And then place date and signature. Signature, date and place. So this is how the report is issued under 3420. Any doubt? Any doubt with respect to this basic? And these are the basic elements. I'm not saying this is the only way or these are the elements, maximum elements. Apart from that, there would be multiple things, because this is the basic elements I'm talking about. Any doubt till now?
No, sir.
No? Okay. If no further doubts, what we can do is we can take up some questions on this topic. Okay, and we can then discuss about the questions, so that you can get some good understanding about the topic. Let me open the questions. So I have a one good case scenario. Again, it will enhance your understanding about the topic. Technova Solutions, a leading technology company listed on the National Stock Exchange. Okay. So the company is listed on National Stock Exchange, is in process of securing substantial loan from consortium of banks to fund a major expansion project. As a part of the loan applications, Technova has prepared a 5 years financial projection incorporating both best estimate and hypothetical assumptions to demonstrate the project's financial viability and company's ability to repay the loan. The banks have appointed ABC and Associates, a chartered accountant firm, to conduct an examination of the Technova's prospective financial information in accordance with SAE 3400. During examination, ABC Associate encountered the following scenarios. Technova's best estimate assumptions for the revenue growth are based on ambitious market penetration strategy and a favorable regulatory environment. Okay. However, the auditor notes that these assumptions do not fully consider the potential impact of emerging competitors and recent regulatory changes that could adversely affect the company's growth prospectus. Technova's financial projections include a hypothetical scenario where the company secures a significant government contract, resulting in a substantial increase in the revenue. While this scenario aligns with the company's strategic objectives, the auditor finds that the assumptions regarding the contract award and its financial impact are overly optimistic and lack sufficient supporting audit evidence. Now, with respect to these scenarios, you need to discuss the responsibility of the auditor. What is the auditor's responsibility over here with respect to the best estimates assumption and hypothetical assumptions that we have discussed during the start of this particular chapter when we were discussing SAE 3400? Objective and the responsibility of the auditor. Come on.
In current case, best estimate assumptions do not reflect about the emerging competitors and the regulatory changes, and also hypothetical assumptions are not relevant and reliable. So he should not take up this engagement.
Okay. Okay. Anyone else? Anyone? No? Okay, I'll tell you. See, now here, when I talk about the responsibilities of the auditor, okay, what is the responsibility of the auditor, first of all? The responsibility of the auditor when it comes to the best estimate assumption is to understand whether these assumptions are consistent with the purpose of the information. Number two, when I'm talking about best estimate assumption, the responsibility of the auditor is to understand whether these estimates are not unreasonable. And when I'm talking about hypothetical assumptions, I'm talking that these assumptions should be in line with the purpose of the information. Here, if I talk about this particular best estimate assumption, are these assumptions unreasonable? It could be because they have not considered the potential impact of the emerging competitors. These assumptions are based on your ambitious market penetration strategy. That means that the company is assuming that they will penetrate the market very easily. There will be no competitors. They will not face any kind of hurdles or any kind of roadblocks from entering into the market or from capturing the market. So ambitious market penetration strategy. Second is the favorable regulatory environment. Again, favorable regulatory environment, you are going towards the hypothetical assumptions. This is not the best estimate assumption. Best estimate assumption is you forecast based on the conditions or events that you have the information about. But if you go, if scenarios like if this would have happened, if that would have happened, then it becomes hypothetical assumptions. Okay. So whether these are unreasonable, you can say that yes, there is a chance. Second, hypothetical assumptions. Are they consistent with the purpose of information? Okay, what is the purpose of information over here? So they are securing a substantial loan from the consortium of banks for the major expansion of the projects. When it comes to hypothetical assumptions, what they are doing is that company secures a significant government contract, resulting in substantial increase in the revenue. But again, that is very much, out of the, area of the expansion. They are talking about government securing a government contract. Overly optimistic, overly, you can say unreasonable, I would say. So in that case, again, this is not consistent with the purpose of information. So the first responsibility does not meet over here. Number two, whether the prospective financial information is properly prepared on the basis of assumptions. Now here, that is not the part, because we don't have the prospective financial information on the hand, but that is also one of the objective of the auditor. And the third is whether they are presented and all material assumptions are adequately disclosed. Again, we are not talking about disclosures over here because the information is not available to us. So based on the first point, unreasonable and consistent with the purpose of information, in that case, I could say, okay, they do not appear to be. Clear with the answer? Any doubt? Any doubt, guys? Okay, now let's say you determine that the assumptions are inconsistent. The assumptions are unreasonable or inconsistent with the purpose of the information. What actions now you need to take? What actions you would take over here in this particular scenario? Let's assume you determine, okay, the assumptions are unreasonable. The assumptions are inconsistent with the purpose of the information. What is the next step? Come on, guys. What will be your next step? How should you communicate your finding to the banks? How will you communicate? Trust me, it is pretty easy. How you will communicate to the banks? Anyone? No? Okay. Pretty much straightforward. In a similar line, basically it is something similar, that we have discussed. Reporting. Straightforward, nothing difficult. What is straightforward over here is basically, we will issue a report where in opinion we will specify, okay, this is something, the assumptions are unreasonable or inconsistent with the purpose of information. Clear? So I will issue a report. In that report, I will, specify this particular thing. Any doubt? Straight away. There's nothing, difficult in that. My report will tell me that. Any doubt, guys, with this? Okay. No issue. If no doubts, then I have one, you can say, kind of, report which is available in the public domain, okay, where the pro forma financial information report is there, that we have discussed in SAE 3420. I will discuss that report, okay, so that you can get an idea how these reports are issued, basically. So again, don't go on the name of the company. It is available in public domain, basically. So you can just ignore the name. See, basically, this is the pro forma condensed combined financial informations, okay, that has been on which the report has been issued. So this is again, as we have discussed in our basic element way, this is your title and this is your addressee. Then you need to identify certain things in your report. You need to identify the pro forma financial information. You need to identify the unadjusted financial information. You need to identify the criteria. Okay, all those things you need to identify. So see over here. If you see here, they have identified, okay, this particular shares, profit and loss associated by the company. The pro forma condensed combined financial information consists of pro forma condensed combined balance sheet as on 31st March 24, 23, 22, the pro forma combined statement on profit and loss account, combined statement of changes in equity, pro forma condensed combined statement of cash flow. So they are identifying the pro forma financial information. Okay, they are identifying the applicable criteria over here, the basis on which the company's management has compiled the information. Okay, over here, basis of preparation, kind of, which is there in note 2. And then they are specifying that these financial information has been combined for this particular purpose. So they are specifying the purpose to demonstrate the impact of the composite scheme of arrangement. If I go back to our basic minimum requirement of the report, so you have financial information, you have source, you have period, you have reference to the applicable criteria. Okay, now over here, then you have kind of the purpose or the over here, the reference to the applicable criteria, okay, on the basis of which the responsible party has performed the compilation, and the source of criteria, like why basically this has been compiled, why this has been prepared. Then as a part from where it has been extracted, you can say the source. So from where this particular information has been extracted, what is the management's responsibility, what is the auditor's responsibility, basically over here. You have engagement in accordance with standards on assurance engagement SAE 3420. Okay, so your reference to SAE 3420 is here. Purpose of engagement, as I said, not responsible for updating or reissuing any reports. Rather, it is for the reporting on the compilation only. So according to that, the purpose of the purpose is specified. They have specified what is a reasonable assurance engagement. Then they have specified the procedures over here. Then they have specified, whether they have obtained the sufficient and appropriate audit evidence, evidence or not. Okay. Then they have specified, like, okay, they have no responsibility to update, report, or reissue for the events or events after occurring after the reporting of this particular here date of report. Okay, and then they have the opinion over here. If you see opinion, in our opinion, pro forma financial information as requested by management has been compiled in all material respect on the basis of preparation as stated in note 2 to the pro forma financial information. So everything has been compiled appropriately. As I said, emphasis of matter paragraph is necessary. Okay, you need to draw attention that this pro forma financial information is basically prepared for this particular purpose only. It is not something beyond, anything on the unadjusted financial information or something beyond or after performance financial information. No. And our opinion is not modified in this respect. Other matter paragraph, if you have anything to report on. Okay, restriction of use. And then you have a date, place, and signature. This is how this report is issued. Any doubt? Any doubt on this?
Sir, my
Yes.
doubt is not related to this, but about SAE 3400.
Mhm.
In that case, we said that prospective financial information is examined by the practitioner and then he report on it. In case the prospective financial information is not prepared on the basis of reasonable assumptions or say, इन दैट केस क्या वो मैनेजमेंट को रेकमेंड कर सकता है कि क्या एजम्पशंस उन्होंने लेने चाहिए अकॉर्डिंगली फिर नए से वो प्रोजेक्टेड फाइनेंशियल इंफॉर्मेशन बनाई जाएगी एंड आफ्टर दैट ही विल इशू हिज रिपोर्ट will that create any self review threat so it is not allowed?
See, there are two things. Number one, when let's say for example, in our earlier case, let's say in this particular example, okay, there was a bank and that was bank hired you. Now what happens is actually in practical scenario is these informations are prepared, and this preparation of prospective financial information takes a lot of time. Let's say management has taken a lot of wrong assumptions, unreasonable assumptions. Now if you will tell management, okay, these are unreasonable assumptions, okay, and if you ask management to redo everything, basically your base on which you are supposed to issue opinion has gone. It's no longer there. So here, when the bank is asking you, okay, this is the prospective financial information we have received, issue opinion on that, and tomorrow if you issue on opinion on some other prospective financial information, but you are hired by the bank on this particular prospective financial information, this is gone. You are not issued opinion on this. Issuing opinion on some other prospective financial information is a different engagement. Now coming to the point where you provide the recommendation to the management and management prepares accordingly, and then there is a self-review thread. See, when we do audit, okay, or when we do examination of prospective financial information, we are reporting on the reasonableness, okay, of the assumptions and their consistency with the purpose. We are not saying how to make an assumption. No. If management has made an assumption, okay, just tell us the data, the source from where the assumption has been made, whether that is reasonable or not. If an assumption is not reasonable, I may say to management, this is not an reasonable assumption. But I'm not saying to the management, okay, how to make a reasonable assumption. I am commenting on the assumptions which are there. I'm not providing a recommendation how to make a reasonable assumption. That will cross the line and it will go on the other side that you are, becoming a management expert. So we do specify this is not reasonable because of this particular case, but we are not specifying how to make a reasonable assumption. So over there is a distinction, and conflict of interest does not arise.
सर फॉर दिस पर्पज इफ जो कंपनी है वो कंपनी ने किसी चार्टर्ड अकाउंटेंट को हायर किया होता तो प्रिपेयर सच प्रोजेक्शंस, तो वहाँ कौन सा स्टैंडर्ड्स एप्लीकेबल होता?
See, if they have hired a chartered accountant and if he is doing some procedures where there is no assurance, then what do you think? Which one should you apply with a no assurance?
सर रिलेटेड सर्विस वाला आता
Agreed
पर
upon procedures?
यस सर.
Because at the end, I'm not issuing any opinion. I'm doing some work. I'm reporting them the factual findings, whatever are there.
Yes sir.
Any doubt, guys? Any doubt with respect to any of the part? important concepts that are required to be understood with respect to these standards is when they are applicable, what is covered by these standards, okay, and how to issue the report. What are the important aspects with respect to the reports? But when I talk about performance of the standards, it's more or less the same, the procedures that you perform for the audit, but in a modified way. So again, that depend upon the type of engagement, that depends upon the the purpose of engagement. These changes, you have to make change. So something might be relevant or material from the point of view of audit, might not be material from the with respect to the prospective financial information. Materiality will change when it comes to the different kind of uh, assignments and engagements. So you need to apply the same concept, but by tweaking it a bit. Okay, so that was the main the main purpose is to understand when these standards are applicable, what is the overview and summary of the standards, and something critical about the reporting part. Okay, if no further doubt, I propose to keep the session till here, guys. Okay, I would like you to read the chapter. Please read it. That is very, very important, so that you can get the understanding of the topic. Come up with your doubts, because then only you will get clear about the concepts. Practice on the questions which are given at the end of the chapter. I'm not sure how many of you are doing the practice of the questions which are given at the end of the chapter. You have integrated case scenarios, you have other kind of questions below, theoretical questions. Please practice for these. Their answers is also given, but I would suggest first write your own answers and then compare with the answers which are given over here. Okay, so please do practice. There are a lot of materials available on the BOS portal. Mock test papers are there, MCQ booklets are there. Please refer those, practice as much as you can. That is the main thing you need to do. And read. There is no alternative reading, trust me. Okay, if no further doubt, guys, then I propose to keep the session till here. In the next session, I will start with a new chapter, chapter number 12. So please read in advance. Chapter number 12, it's about digital audit. Okay, and we will see a lot of new technology involved in the audit. I will also try to bring up live examples of the application of the technology in that particular scenario. Okay, so I'll see you in the next session. Thank you, guys. Thank you for participating in today's session. I'll see you in next. Thank you.
Thank you,
Thank
sir.
you, sir.
Thank you. Yes.